We begin with that massive plunge on the markets today. The Dow Jones suffered its largest single-day point loss in history. At one point, the Dow dropped nearly 1,600 points. CTV's Janice Golding has the details.
It has been the market's worst week in 2 years. The Dow Jones Industrial Average plunging nearly 1,600 points at one point today. That comes on the heels of Friday's 666-point drop. That's 2 straight days of steep losses for U.S. stocks.
We've never seen the Dow Jones, that venerable measure of U.S. stocks, post such a big drop.
The Dow quickly bounced back, regaining about half those losses within a few minutes. But as of late this afternoon, its gains for the year were still gone. The Dow ended the day down 1,175 points, its largest same-day drop in history.
Not concerned.
Why not?
I think it's mostly speculation.
But for every guy who wins in the stock market, somebody loses in the stock market. Zero sum.
Every now and then you get yourself these little periods of risk that are temporary. I think we are sitting in one right now. Do you have too much marijuana stock? Are you all on one side of the boat? If you don't have any bonds, if you don't have any cash, I believe you don't have the right portfolio.
For more than a year, the stock market had experienced record-setting calm as the U.S. economy grew and interest rates remained low. But experts warned that after big gains in 2017 and early 2018, stocks were overdue for a fall. The drop began on Friday, investors citing concerns over higher inflation, interest rates, and weakness in energy prices.
For a decade now, we've had ridiculously low interest rates in much of the industrialized world. The central bankers are eager to get back to something like normality, where money actually costs something to borrow, and so they are relentlessly raising interest rates. That looks like the main catalyst that's going on.
To put today's loss into perspective, the largest drop the Dow saw previously was 777 points. That occurred back in September 2008 during the global economic crisis.
Janice Golding, CTV News.
Now, White House Press Secretary Sarah Sanders has released a statement. It reads, "The president's focus is on our long-term economic fundamentals, which remain exceptionally strong, with strengthening U.S. economic growth, historically low unemployment, and increasing wages for American workers. The president's tax cuts and regulatory reforms will further enhance the U.S. economy and continue to increase prosperity for the American people." John Shmuel is the managing editor at LowestRates.ca and joins us now. What's your reaction to what we saw today on the markets?
Well, there is a little sense here that the panic is setting in, that investors are selling off. But this is, in fact, a much-needed correction. We haven't seen a correction of this type since January 2016. So naturally, after 2 years of not seeing something like this, you get a sense that the market's a little afraid. But we're going to have to see how this plays out. But if it does play out in a way where we go down 10, 15%, then considering the climb, I mean, last year we saw the Dow Jones Industrial Average rise 20%, then pulling back a little, recuperating, that's healthy for the market.
What do you think is behind this current panic that we saw?
Well, we had a jobs report released on Friday that showed that wages are rising in the United States, and that's something we haven't seen in a while. Now, we've seen a great run of job increases, but the fact that wages are rising suggests that inflation may be around the corner. If inflation goes up, we're going to see bond yields go up. We're going to see interest rates on savings accounts go up, on bonds go up finally. And retail investors may finally return to that market to get returns. That will make stocks less attractive. And so, there's a sense of maybe finally, after 9 years, it's here. And we're going to see kind of a structural shift in the market. And so naturally, we saw a reaction like we did today.
What do you think this means for Canadians out there who have RSPs and RIFs and pensions?
Well, I mean, if you check your account today, it's not going to look good. But the most important thing to do in a situation like this is don't panic. Like I said earlier, market corrections and pullbacks are a natural part of the market. And this can be healthy, can be a good thing. The last thing you want is a market of euphoria where we just keep going up and up and up. And in that situation, you should be concerned, right? You wonder whether the market has sort of detached from fundamentals. If we pull back and look at the broader U.S. and Canadian economy, things look good. I mean, the unemployment rate in the U.S. and Canada are at their lowest levels they've been in decades. It's clear that a lot of hiring is happening. The economy is very healthy. And so, companies and their stock prices are going to reflect that.
You know, people who work on Wall Street and Bay Street, they get to work pretty early. Do you think they get to work even earlier tomorrow and brace themselves?
Yeah, I think a lot of people are going to be in very early. There's going to be a lot of attention going on to how stocks progress tomorrow morning, whether we see a bounce back from what's happening, some relief. Because if we see another bad day like today, then we're going to start asking questions like, well, is this the top of the bull market? Have we run out of steam? Where do we go next?
Managing editor at LowestRates.ca, John Shmuel. John, thank you very much
for having me.
We're going to take you to Toronto now, where